Are you prepared for the biggest shifts in the equity and AI markets?
That's right. Experts like Emily Brown and Michael Pento are here to guide us through the upcoming financial landscape.
And we've distilled their in-depth analyses into AI-powered summaries to save you time. Just a few minutes is all you need.
So what can we expect? Let's start with Emily Brown as she outlines potential corrections in the equity markets.
And stay tuned. We'll also explore Michael Pento's take on how fiscal policy will shape our financial future.
Make sure to catch our upcoming analysis on precious metals and their potential rally.
Welcome to Markets Weekly. Today, we're discussing the equity market landscape with insights from Emily Brown, a market analyst.
Emily's analysis outlines the risks and opportunities as we head toward 2026.
Emily Brown suggests the possibility of a market correction, predicting a pullback of 15 to 25%.
This aligns with Joseph Wang's concerns about market volatility as we approach the new year. According to Emily Brown, rising Treasury yields significantly affect borrowing costs.
This causes investors to reevaluate the attractiveness of equity investments. Emily points out that shifting investor sentiment is critical.
Many are choosing to hold cash as a defensive strategy. Emily emphasizes monitoring economic indicators like inflation and employment rates.
These metrics are vital for shaping equity market outlooks. What does Emily Brown foresee for 2026 equity markets?
Emily highlights that while a correction seems likely, resilience is possible if inflation targets are met.
Emily Brown advises that investors must stay alert to market changes.
Joseph Wang reiterates the importance of monitoring Treasury yields and investor sentiment for smart financial decisions.
Today, we're delving into the analysis of the AI market dynamics with insights from an expert.
This expert discusses the growing skepticism surrounding AI valuations and implications for investors.
The guest warns that the 25 trillion AI bubble may be overstated.
This expert emphasizes that current enthusiasm isn't backed by strong fundamentals.
What does the guest say about current investor sentiment towards AI?
The expert suggests many investors are beginning to question their initial enthusiasm.
How does the guest foresee corrections affecting the AI market?
The expert indicates high potential for corrections if valuations remain ungrounded.
What predictions does the guest make about the AI market?
The expert forecasts that reassessment of AI valuations is crucial to avoid imminent corrections.
The guest concludes that a cautious approach is essential for investors in the AI sector.
They recommend focusing on companies with proven fundamentals for long-term security.
Today, we analyze insights from Michael Pento regarding potential impacts of fiscal and monetary policies on the financial markets in 2026.
Michael emphasizes the importance of understanding these economic trends for investors.
Michael Pento discusses that a rising fiscal deficit can lead to greater volatility in financial markets.
He suggests that changes in monetary policy can affect borrowing costs for consumers and businesses. Michael warns that increased interest rates will likely decrease bond values.
Investors should proceed carefully with their fixed income strategies. What does Michael Pento forecast for the 2026 stock market?
He anticipates increased volatility will require strategic investments to manage risk.
Michael highlights that the housing market may experience cooling effects due to rising interest rates.
He advises investors to closely monitor mortgage rate changes as they could significantly affect the market.
What should investors expect regarding market volatility in 2026?
Michael predicts that heightened volatility could become standard, prompting preparation for downturns in several asset classes.
Michael concludes that formulating effective strategies is key for investors as they approach 2026.
He underscores the importance of monitoring economic indicators for informed investment actions.
Today, we're analyzing insights from John Smith about the future of precious metals, as discussed with Lisa Green.
John highlights that various economic pressures could lead to a substantial rally in metals like gold and silver.
According to John Smith, precious metal prices are influenced by factors such as inflation and interest rate changes.
John notes that global economic uncertainty is causing investors to seek safe haven assets like gold.
Additionally, Lisa mentions that ongoing supply chain disruptions are further increasing demand for precious metals.
John emphasizes that high inflation rates are driving more investors toward precious metals as a hedge.
Lisa adds that increased costs for raw materials are significantly impacting the supply of these metals. According to John, periods of global economic uncertainty historically lead to greater demand for assets like gold.
Lisa supports this by discussing how current market volatility is making gold a favorable investment.
John explains that supply chain disruptions are contributing to shortages, which boost prices.
Lisa notes that with these disruptions, gold and silver are becoming more attractive to investors seeking security.
What does John predict for the precious metals market in the coming year?
John predicts that if inflation continues to rise, we could see a significant rally in gold prices.
He also mentions that investors should brace for potential volatility in this market. John underscores that investors should consider diversifying their portfolios with precious metals to hedge against inflation.
Lisa advises keeping track of market trends and economic news to make informed investment decisions.
Today, we're exploring insights from Gary Wagner on the gold market and the current economic pressures.
Gary discusses rising inflation and geopolitical tensions as influences on gold prices.
Gary Wagner emphasizes inflation's role in increasing demand for gold as a safety measure.
Additionally, geopolitical tensions elevate concerns and prompt investment in gold.
Gary notes that geopolitical tensions compel investors to increase gold holdings.
This is consistent with historical patterns where gold prices surge amid conflict. Gary discusses how rising inflation correlates with increased gold demand.
With consumer prices rising, many seek gold to protect purchasing power. What are Gary Wagner's short-term predictions for gold prices?
Gary predicts a potential rally if inflation continues to drive concerns in the markets.
In conclusion, Gary Wagner suggests gold as a stabilizing investment amid economic fluctuations.
He highlights the importance of monitoring inflation and global tensions.
Today, we'll explore an analysis by Emily Brown regarding significant shifts in China's semiconductor and AI sectors.
Emily highlights strategic movements within these sectors and their implications for global trade dynamics.
Emily Brown notes the aggressive improvement in semiconductor production as a strategy to reduce reliance on foreign tech.
According to David Lin, these changes could significantly alter international trade dynamics.
Emily elaborates on how China's push towards becoming self-sufficient in semiconductor manufacturing is changing global industry interactions.
These developments might challenge existing trade dynamics and redefine supplier agreements globally. Emily emphasizes that China's impactful investments in AI play a crucial role in establishing its global competitiveness.
These breakthroughs in AI technology can foster innovation across diverse industries, including healthcare and finance.
What potential future does Emily foresee for trade relations between China and the U.S.?
Emily predicts that increasing competition may create heightened tensions in U.S.-China relations, impacting market stability.
Emily suggests that investors focus on AI and semiconductor industries as viable growth opportunities.
Grasping these dynamics is essential for navigating potential economic adjustments.
Wow, what an enlightening discussion we had today, don't you think?
Absolutely. Our guests really brought some valuable insights to the table.
Let's recap a bit. Emily Brown highlighted China's tech evolution and investment opportunities.
Right, and David Lin pointed towards the trade war's consequences on global markets.
Then there's Gary Wagner, who emphasized how geopolitical tensions might influence gold prices.
John Smith added that we should keep an eye on the precious metals rally due to economic shifts.
And Michael Pento reminded us of the importance of monitoring economic indicators to navigate future volatility.
Plus, the anonymous expert raised a crucial point about the potential AI bubble and the risks it entails.
It's fascinating how most guests agree on the need to monitor economic and geopolitical factors.
But there are clear disagreements on the timelines for market corrections and the focus of investment strategies.
If you found these insights enlightening, make sure to like and subscribe for more content like this.
Your support is crucial for us to continue delivering expert analyses to help you navigate the markets.
And don't miss our next episode, where we'll dig deeper into the impact of global trade dynamics.
Thanks for joining us, and we'll see you next time.